Simon O'Kelly, Finance for Living. Welcome to our March State of the Nation. So what's happened? Reserve Bank recently, they've met and they've kept rates on hold, which is good. We won the Sustainability Award, which is great recognition for the business, the only mortgage broker who won that award. Certainly thanks for all of our customers for your support and for your demand, with questions like, are there lenders that don't support fossil fuels? So that's all great. What I want to focus on today is cash flow. So this is the biggest item that we're seeing at the moment. We've had people whose rates have increased, especially with fixed rates. Well, everyone's rates have increased pretty much, but with more and more people coming off fixed. Some people have taken out personal loans or used their credit card a bit, and they've got into a little bit of strife, and often our clients are the ones who have said to their friends, hey, go and talk to Simon and Ainsley, see if they can help you out. So I'm just going to give you an example, because we're just seeing a lot of this at the moment, and we want people to keep their homes, of course, keep their investment properties if possible as well, but with repayments going up, some people are struggling with this. So we're trying to do what we can to see if we can find ways so that people can hold on to their important assets and their roof over their head, right? Obviously, that's an important one, a very important one. So in this example here, if the home's worth, say, 600,000 and the loans, actually, no, I'll start here. The value of the property is 600,000, 80% of that's 480. So banks are typically okay to lend 80% of the value of the property, as long as there's enough income. If the loan's 420,000, okay, which is less than 80%, and they're paying at 6.5%, then monthly repayments are around 2,655 per month, okay? But let's say our client here has a personal loan worth $30,000, and that could be over 5 years, so maybe their repayments $667 a month, and maybe they've got a credit card that's maxed out at $10,000. And maybe just to pay the interest, not to pay it down, maybe they're paying roughly $200 a month just in interest, so it doesn't go over the limit, right? So if that's the case, 2,655, 667, 200, they're paying about $3,500 a month in overall repayments. So from a cash flow point of view, by the time you're buying groceries for the family and paying all the bills and the insurances, that repayment has gone up a lot for a lot of people, right? So just back to our client here. So if we merged all of this into one loan, so the 30,000, the 10,000, so that's 40, on top of the 420 is $460,000, right? So 460,000. If we did a loan at, say, 6.1%, so let's hope we can get our client a better rate. Just as an example, rates do vary, but just as an example, over 30 years, that's about 2,788 a month. Okay, so if they're currently paying over $3,500 and you can pay closer to $2,800, then there's over $700 a month difference from a cash flow point of view. So we're seeing a lot of this at the moment, as I say, trying to keep people in their homes, and sometimes it means consolidating the debt. So anything else happening in the market at the moment? First home buyers are certainly out, which is great. Around the nation, everything's a bit varied depending on where in the nation. Some areas are flying, some areas are going fine. But overall, there are certainly plenty of people who are struggling a bit, and we are trying to help as many people as we can. Thank you. That was it for the March update. Till next month.